Okay guys, Sam here with you on Tuesday, October 9th, or kind of late morning here, and we are looking at traditional assets today. So we polled our members, let them choose, as I remind you. It's not me choosing these. I let the members pick, and then I always come to it. Try and show you where I think there might be some opportunity. Now, so the first thing I would say, I'm glad to see members staying open-minded to other assets outside of crypto. There's always something that's moving here, and particularly in FX, you always have plenty of choices of what to trade, which is not what we're experiencing in crypto. So we're making a real effort to try and open people up to the idea of taking their assets, whether it's using Bitcoin to fund an FX account. That's very easy to do. You can be up and trading in 10 minutes. You don't have to sell your Bitcoin. You just use it for margin. So I'm actually planning a little video series to show you how to do that. It's very easy to do. But first up here, buy request, right? So look at the euro to the dollar. Now, as I will remind you, anytime we look at FX, if there is any one secret to success in forex trading, it's that you have to think long term. Really, the best trades will be found on the daily or above. It's in the temptation, because it's always moving, there's a real temptation, and there's God knows how many millions of vendors will sell you some crap to pull you into the FX market. So you want to be careful about that. But it tends to be simpler is better. And you want to look for these longer term trends. So for example, coming off of this low here, we see a very clear, now this is a 3-day chart, I should specify, a 3-day chart. So coming off this low, this is the 2000 low. That impulsive structure, that's an 8-year trend. 8 years to get into that trend. So, again, that's hard to imagine anybody stay long. Here's who did stay long, an algorithm. So, this is the variable you have to deal with. You have to retune your thinking when you're coming to FX to long term. There could be weeks, if not months, before you see a new trade opportunity, which sort of pros and cons, right? The moves are much more substantial, but if you're coming to trading because you want the action and the excitement, FX is not the place to be. I would tell you, it's the slow, patient, deliberate, methodical trader who ends up doing incredibly well here, but not the guy looking for his daily fix. It's just not the market for it, because there's just too much noise. But when you look at these longer time frames, you can see it just very clearly. And so here again, all right. So there's 5-wave structure. What do we know? We trend in 5s, we correct in 3s. Now you can look at this and say, well, is that 3s? Well, there's a complexity to it, no doubt. So if we were trying to evaluate it in the context of 3s, that's the 3 pattern that we'd be looking at. There's an ABC. Now this is deep. We have gone beyond. the 6-5 here. But if we think of this with our Elliott hats on, if that's a completed impulsive structure, or we can think of it as a 1-wave. Well, we know a 2-wave can go often anywhere from, so note here, look, as we come down, look at the reaction at the 50, small reaction here at the 618. So this just a lot of volatility here. I will tell you that particularly with the euro, this is just an observation over many, many years of trading it. It tends to like the square roots. So it likes the 786 and it likes the 1272. Not that our algo that we all know, if you watch me here, you know this algo is in the market. Not that it's not found here. It's in the, you'll often find it in the external retracement. So let me see if I can find you a couple examples. So first here, so note we're in no man's land here, but there, so you're always wondering, why does it stop there? So first thing we do, if we're allowing for the idea that this 5-wave move here is being corrected by all of this structure here, obviously there's complexity to it. It's not just a simple ABC. But if we look here, so here this is fairly clear, right? So we can get a nice, clean, clear ABC, and as I recall, right, that was right to the 50. So that there you could make that case. You can see how that would have had some price participation here as we approach that 50, and you had a fairly good move out of it. But you don't. It's not the ABC of the 2-wave leading to the 1. So we roll over. So how do we organize it here, which is all we're trying to do with Elliott Wave? Well, if this is an ABC, then we're going to have continuation. Reasonable to assume that this is what we're going into is a WXY. So WXY just connecting to ABCs, right? It's not complicated. So here's the completed first ABC. Then we get a counter trend. There's the X wave. And then it would appear, right, at first glance, that we have an alternate, though. It would appear that we have an A, B, and a C going in. So you look at that. Of course, you would want to check from the all the way, swing high to swing low. That's the first place you'd go. All right, so when we can, right, so there we go, all right, guys. So it's not complicated. Dominant swing high, swing low, right? So there are ABC completes here. We've got our W wave here. So we're looking for reactions at these levels. Now here, you wouldn't have known, right? So as I said, you wouldn't have known that this was going to go into a WXY. So you'd have been looking right here. So note what we do here. We come right to the 618, boom, right to target. Do you see that, right? But now that's not that takes. Let's get the timeline on that. So that we hit the 618 December 24th of 2010, and we pivot up here May of 2011. Right? So it's almost a 6-month trade to be in that, right? That would drive you crazy waiting for that to get to target. Here's what doesn't care? An algorithm doesn't care. Right? That's why they use them, right? So it buys here, it sells it here. So how do we know it's an algorithm? It's not this, it's the reaction at the target. Right, like straight down. So it hits target, boom, lack of buying. All right, so with that established, so as a candidate here now, knowing that we have a technical pivot up here, well, of course, you'd pull from here as well, right? So all along the way here, you can see it is here, right here, 6. So do you see it? I got to open that up. It's always there, guys. Always, always, always. I don't care what market you put in front of me or what time frame you put in front of me. I'm going to find this algo pattern. It's always there, always. All right, so here's 618 to the tick, right to target. It's always there, always there. In fact, second target to the tick. See that, right? And then what's the reaction? Boom. Okay, so all right, I think if you watch this channel, you know there's never. I defy you to put a chart up where I can't find this, right? It's always there. It's always there. All right, so here we come. So we've got this one now. Okay, so we're just using dominant, right? Dominant swing, the safest way to go. Dominant swing high, dominant swing low. All right, now we wouldn't have known. All I know is I've got a 50, but I do know here that I've got a little ABC, and of course, right, no surprise here. What happens at the B wave? All right, so we jab through the 50. So likely what you have here is a little bit of a front run, so you can see it here. So why does he get through the 50? Well, it looks like that's an algo trying to get, you know, that looks like it's smaller than it is. That's 1400. That likely in this range here, that could be an algo taking a slight front run on that. But or one of two things happen here. Algos that bought here are running into the algos that are selling here, and they overwhelm it. But of course, right? So from this 50 right to target. Right, so it's always there, guys. Always. You'll never find it not there in FX. That I can guarantee. Okay, so we've had, I don't know how many we've had already. So this was to the tick. Here, this was to the tick. Here, this is to the tick. And of course, right, if you have 3 pivots, right, I want to see if there's any geometry here, any help here. All right, so of course, right, just to add to it, right? So right to the median line. So here's the corner pocket trade. That's a perfect 50 for a corner pocket, right? The caveat is that if this pivot holds, excuse me, guys, hang on a sec. Okay, back. If that pivot holds, we have 80% probability. Now, often you'll see me line these up at algo targets, right? It's the confluence of those two things that gives you that probability factor here, but the key to it is as long as this holds, right? So we go straight to it, and it really is remarkable, right? It's always easy in hindsight, right? I understand that. Okay, so there it is, right? But that's the setup, right? So that takes that's May of 14, and we get down here, we get to target in March of 15, right? These are long-term trends, right? But if you sold it here, at no point if you had a stop on the other side, at no point was your stop threatened. Just straight down. What was the challenge there was to be patient. That was the challenge, right? Which is why they use algorithms, because the algorithm doesn't give a shit, right? It's just going to stay long until it gets here. It's going to buy it. All right. So where are we in the larger degree? Well, if this is an ABC, so we look here and we think, okay, this certainly has the ingredient. Oh, sorry, we already have it here. So I'm put it here in. Let's put it in, let me put that in yellow so we can see it a little better. Okay, so if this is A, then I've got my nice little 3-wave technical perfect ABC into my B wave. Well, I've got a good candidate down here for a C, and I can probably make a case there's some sort of diagonal down here. We do have to allow for the possibility that we're wrong here, and that rather than A, B, C, that this is potentially could be 1, 2, 3, 4 going in down for a 5. That would, so it would imply a diagonal structure, but I would consider that an alternate, not the primary, because of what we see here. So that's, you know, I mean, it's worth, I certainly would pay attention to that as an alternate. So I would want to have that somewhere, so I know that if this starts to really accelerate down, so I can have some targets here. So if this were our 2, and we were thinking now with our Elliott hats on, well, you know, if I'm looking, well, pardon me, as it's a diagonal, right? We're looking for the relationship between the start of the 1 and the pivot of the proposed 3. If, again, assuming that my primary count is wrong, and we're thinking, oh, it's a diagonal. All right, so I would take from the swing start of 1, get it right on there. There we go. Okay, so potentially, what we have here is a front run on the next 50 with this target down here. So again, as I will often remind you, we can't ignore that and go, oh shit, I'm bullish, I'm bullish. You got to allow for that as an alternate. It certainly is possible. So we'd have to rethink this. So maybe this is A, B, and C is going in. So we just have more complexity. So so we'd have a 3, 3, 5 going in. All right, so ABC into the A wave, ABC into the B wave, and then we're getting this very, you know, this is a long-term 5 coming down that would correct this. Now, if we put that into the larger context, right, then you think, oh, well, where would that put us, right? If it's because we still would be internal to this 8-year trend. So if I take from that swing low to that swing high, well, we're coming all the way down to the 887, right? It would still be internal, right? We still, as long as we stay above that pivot, we still have an internal retracement. Well, it's mighty deep, right? Mighty deep. So we can't ignore this, right? So this is an alter. So if we're looking for the buy side here or the next sell side here, that would be a target that you would certainly want to be aware of it. So given that, we can understand here. Well, if we're looking for the buy side here, we got to pay attention to the alternate. Should we be wrong? So I'm going to go from the 3-day. Well, again, just knocking them down. So you might go weekly, daily. I just happen to like the 3-day. So if we're going here, and this is if we've run into this, the reason that we're stalling here is because of this 50, which is reasonable to assume, right? We know algos are going to start selling there, and that could very well be a little front run. So note this little low volume node that we have over here as we approach the 50. So, right, as I often remind you, low volume node just means lack of market acceptance. So, you know, then we have, like, just see this over here. We've got this little pivot here. So we've got some indications here that's a technical pivot. So with that established here as a potential, let's go down to, let's see, can I show it in the 4? Let's see if I can get it in the 4 hour. May not be in, yeah, I guess it can. Okay, so here's that candidate here for our low, where we're thinking, well, this is finishing in some sort of a diagonal. The C is in, the ABC is in. Well, here's why I defer to this count as the primary, because I have a very clear 5-wave structure here. So coming off of that low, shit, let's see if I go to, let me go to, I guess I've got to do 8. Let me go to 8 so we can see this. Okay, there you see it a little bit better. Okay, so looking at this, so coming off of this contender here, knowing that possibly we were looking at this as a possible third, well, given this very clear impulse, well, yeah, you could make a case that this is A, B, C going in, and that there's still a 4 yet to come. But remember, we were looking at a diagonal. So for this to go up here and tag as a fourth in the larger degree context seems less likely. So just thinking of it, right? So sometimes it can help to just draw this up like this. So let's give it some scale. So if I'm looking at this as my 4, something along those lines. Now let's go back to our 3-day. Yeah, I mean, it's possible, right? So let's pull from our absolute high to our absolute low. Yeah, it definitely could put us right back here. So that would be, all right, so let's look at it this way. So if we'd be looking for the start of it here, All right, so that would put us right back at the 618. So you can look at that and say, well, that's possible. So if this move here is an A wave, here it's either a 1 or an A, right? We've got a very clear impulsive structure. If that's at the A wave and this move down here is the B wave, we certainly could have room here for this to go A, so we'd have B up here. Oh, pardon me. So this would be, we'd have it this way, A, B, C would be up here. That's still a candidate for a diagonal that would target doesn't change. So you still have the potential for that to be doing that. Right? So so again, you always have to have an alternate. So the assumption is, okay, well, what if I'm wrong? Because we're looking at this now as a contender to be doing this. So here we're putting in the ABC and we're going to, jeez, that's annoying. Come on. Coming down here. So target doesn't change. It's just a question of where's the entry. So let me go back to that 8 hour and we'll see if we can make sense of this. All right, so that's the candidate here that we were just looking at. Okay, so here, with all the subdivision you'd look for, right into a front run on a 50, it's a contender. So I've got a clean 5-wave structure. Very, very clear. So it's either a 1 or an A. Well, let's consider where we went after that. So this potentially now coming down, I can get a 1, 2, 3, 4, 5. So one possibility is we've just come down here into an A wave, right? B wave would be going in. C wave would still be yet to come, which could be a larger B wave. So this 5 down, it's either 1 or A, all right? Because this is a clear impulsive structure. So let me pull this off. Let's get this up over here, possibly, right? So it's either a 1 or an A. So we've come down in 5. So that's again, either a 1 or an A, right? And it's so clearly defined 5, right? So you can see how beautifully Elliott Wave plays in here, how technically this trades. So we come down here. So why do we stop here? Well, we look there and think, okay, well, if that's a 5 wave here, well, I'm looking for, I know my B wave anywhere from the 50 to the 786. So we're not there yet. So it's a candidate here. So you can see we get a little 3-wave structure. Again, we here on an 8 hour here. So I'm sure you can get a 1, 2, 3, 4, 5 out of that. So there's a candidate for an A. So this would be potentially just the ABC within the B wave of the larger degree, right? So that would set that up. So do you see what I'm after here? So right now it looks like I've got A. This is deep for a B, but we know, well, it looks like we're holding the 786. Let's just look here. As I remind you, for whatever reason, right? Maybe it's because they're metric and I don't, for whatever reason they like the square roots, right? So they like the 786. Can't explain it. It's just an observation from a lot of screen time. You'll see the 786 and the 1272 will be responsive here a lot. So if this is going to hold, well, look what this sets up for. So if this is A, B, and we're going for the C. Right, so ideally we'd hold the 786 here. Well, look where my algo target is here. So right at the 50. Right, so interesting to see how this plays here. Now, if this starts to go down here and we go down, well then likely I have the count incorrectly labeled here, and then we'd more likely be doing this. We'd be moving the A down, and this 5 would be coming down. This 3 would go here. This 4 would go here. So this is 1, 2, 3, 4, 5 within the third. Do you follow that? So the fact that we go to the 38 here, it suggests, right, and I can get a little ABC here, that's a reasonable candidate. Let me get that in white so you can see a little better. Reasonable candidate here that we're too quick on this, right? So because the 5th of this is a little ugly. Now, again, I'm on an 8 hour chart. So let's go to the 4, see if we get any better. So this would be the 3, 4. It's not gorgeous, right? So it's not a gorgeous 5th wherever. So maybe this is 3, 4 here. Yeah, I don't love it. So the potential here is that this could be still more legs down to complete this 5, particularly since we went to the 38 here. So that plays. So in other words, no trade here right now because you're too far in between. You're in no man's land here. So if you were trading this as a 1, 2, 3, 4, you're late to the party, so it's too late to sell it, too soon to buy it. So it's just a question of how far are we going here. So I would just be looking for the swing here. All right, we know it's possible. It's possible. Back to our primary. If this holds, So not a trade here because we're through the algo pull. So that's not a clean buy. Right now, algos may, again, we only know one algo. So the fact that we've broken there means that we're going to run into, remember I'm on a 4-hour chart, we're going to run into the resistance on the way back up. So were this to hold down here and come back, we got to get through all of this, right? To confirm that this is a B and we're not just starting into another leg down. So we're going to try and get our fifth so that we're not going to get something like this, right? That would take us down here. Right, so we got to wait and see. So there's not enough there, but again, right? So these are 4-hour charts. You don't have to hurry up here. There's no reason to hurry. These are long-term trends. It's unclear as to where we are. We've had 5 up. We have the potential for 5 to be incoming down, and we're just kind of in no man's land. We need another pivot to help increase the probabilities of our analysis. Right now, could be either one. So why force a trade? So on this time frame, why force a trade? No need to. Now let's go down to the 1 hour, see if we get any help there. So let's clean this up a bit. All right, so right now all we know, we've got a deep move here, and you would certainly want to analyze. So looking here, all right, so for my pivot here, how do we do? Front run, maybe. Hard to say, right? When they're not, that looks probable, right? So here's a better one. Here's to this 50. That's clean. So we know this they got paid there. Front run, maybe. It's hard to say. You don't have any confidence because you've got a fairly good distance to where that 4 is. So what's happening now? Does this look corrective or does it look impulsive? Well, it looks impulsive, right? So you can certainly look at this and make a case for some sort of a 1, 2. 3, 4, 1. Maybe there's the 5 is still going in. Right? We don't know about that B. So just looking at that. So if that's right, and this is the 2, well, we don't even make the. Well, let's see. Let me pull this off. So we're in between the 23 and the 38. All right, reasonable. Already made target there. Again, that's assuming I've got this right. This is a little ugly up here. If I'm right about that 2, not a great looking 2. It's a little squirrely up there. But the implication is it looks much more like I've got something impulsive than something corrective. And I'm here all the way now on a 60-minute. So it looks more, so possibly we're in here, we're done. So if that's the case, how are we going to know? Well, we got to look at the full retrace of that entire 5 wave. If that's the low, again, to a little, kind of early to be declaring that low is in. But if we're going to come back to this in some sort of a 3-wave pattern, something along these lines, that sure sets that up. So now you're rethinking because I've got an impulse here. So it's either a 1 or an A. 1 or an A. Again, guys, Elliott Wave, it's just about organizing the madness. How else are you going to organize it? It just gives you a way to organize it and stay in sync with what an algorithm is going to do because we don't have to wonder about what's going to happen here. We know what's going to happen there. Selling will kick in there. It will kick in until we get on the other side there. Now, again, as I often remind you, just because we know selling is there doesn't mean that the buy pressure can't overwhelm it and break it, right? On one side, an algo always breaks, always. Right? There's always one algo that breaks and is wrong. So right now, here, so it's a process of trying to organize it. Okay, well, if that's 5 down, and this is a 4. If that is a 4, let's go to yellow. Let's go up a degree, so we can see that. Let's go micro. All right, if that is a 4, well, then I know I'm looking for a 1, 2. So think, right? So if that's 5 down, that's a candidate for a 1 wave, right? In the larger degree, that's a candidate for a 4. If that's a 4, what are we looking for here? We're anticipating an impulsive structure. That's what this implies. In fact, I can look at this. Looks to me like maybe with a modifier here. All right, so we don't make it here. So the fact that we don't make the median line, let me go 2 hours. See here. Let's try 3. The fact that we don't make the median line, sign of weakness, although it looks like possibly with a modifier here, if I go to shift, well, we got through it. We got to the, let's try the modified, which is just a channel. There it is. Okay. Look, I've been doing this so long, I can kind of just eyeball it here. So let me show you this. So if I put a channel on this, right, the channel and and the modified shift are identical. All right, so whether you prefer, I like the median, I like the tag of the median line myself. My partner, he likes the channels, but same idea here. When we break here and then we break the Vegas wave, we're going down. Right, and then remember, this was also relatively technical pivot here. So if we have this correctly identified, and that's a 3, right? So putting all the pieces together. So we're in between. We're in between the 38 and the 50. Certainly qualifies as an area we'd be looking for our fourth. So if that is ABC, so if we have this as ABC, ABC, let's go to blue here so we don't get lost on which count is which. So if that's ABC, well, then we're looking for 1. Right, we're looking for 1. So how do we know? Well, we're not going to know until we see what the reaction here in this zone here. Because if this is 1, we're looking for the 2 between the 50 and the 618. So this becomes the point at which we get a tell as to what's more probable. Again, doesn't mean that this couldn't react here and then shoot straight up. It's just that becomes more probable. Okay, so if that's 1, 2, and we're going to go down for a full 3, then prices are heading lower. We're just completing. All right, remember, you always got to put it back into context. Where would that put us? Well, if this is an A wave, and then we're coming down here and we're going to get another 5, then we've got either a 1 or an A wave. So right now, we're kind of trading between, we're trading internal retracements with an Elliott wave structure. Let's go to 4 hour here. All right, so this clean 5, I'm trying to get some sense of where I am in correcting this 5, right, off of this low. I know I'm internal. I know I'm looking for a 3-wave structure, but it's not that simple, right? You got to dig into it and say, okay, where am I? Because I got 5 followed by 5 that was preceded by 5. So you got to put that. That's where the Elliott wave knowledge becomes helpful. Where are we? Where are we? What's most probable? If this is done, if this is a significant low. Now remember, take note of the date here. This is Trump coming into office, right? Euro strength. Trump coming. Here he takes office in January. That's straight Trump pump. So up we go. So where are we in the context of this entire move? If this is a good low, then this is potentially all just ABC off of that. When do we pivot up here? February of 18 from January of 17. Right? These are long trends, long trends. All right, so if that's an A wave, well, there's no way to be clear about where we are in the context until we see some reaction at some of these critical pivots. Is this A? Is this 1? Is this 1, 2? No way to know. So really what we need here is another pivot. So there have been trades here. So if I go back to the 1 hour, there are trades in here, but you want to try and align yourself with the longer term structure and pattern. All right, so did we have I think we had a corner pocket right here. Right, so that interesting, right? So we come right to the 50 here, but we don't quite make the target, right? As we tap the median line. So coming down, right? So again, the idea is there's plenty of trading in here. That trade that's from September to, let's see, what do we get? September 10th, these are 1 hour here. So this is September 10th to October, what are we getting here? September 18th, so you've got an 8-day trend there, right from the 50 right to the median line, and then it rolls over. So the fact that we don't make target, interesting, right? So is it a front run? How do you know, right? You don't know. It could be, certainly could be a candidate here that they were front running the target or just ran into another 50, right? That's a bit a ways from the 50, so it's hard to know. Median line, maybe, no way to know. But here, I can certainly count 5 coming down. So all I know is that the next thing I'm looking for is 3 to correct that 5. Right? As to how that plays in the larger structure, again, so you have a primary and an alternate. What's your primary? What do you think is happening? Right? What's more probable? Well, the only thing I can say with confidence here is that this structure looks corrective, so that looks like a 3, and I've got 5 coming straight down. So the next thing to anticipate is 3 correcting that 5. So as far as I'm concerned, the next trade here is a sell. Whether this is a 1 or a B, we're looking for 3 waves to correct it. That correction into this technical zone sets up a very clear sell. Right? And then we would realign our geometry to see if that would be of any help to us. So we pull all of this off. So if we were going to come back down here, so I've got everything I need for median lines. All right, so let's go. I'd go back. Always start with original. So potentially here we have a corner pocket setting up. So if that's going to be, and again, this is a leading indicator. All we know is that if we get up there and we get a good pivot and it holds, right? If it breaks, different story. But you could continue to pull this, right? Maybe we get a golden corner pocket, right? That's the golden corner pocket right into the golden zone. So all we know is that we have a leading indicator, so that the median lines give you a sense of timing as well, right? Could hit here. Could hit here, could hit here. All we know is that as long as this pivot holds and we don't break this, 80% probability of making the median line. But again, right, it could make it the next, you just don't know. It could make it right away. Now that's a lot to move here, but it certainly could. So the reason that this often is good for us is because if this is 1, 2, and we're going to pivot here, this potentially is just setting up the 1 wave of before we go into the 2 wave of the 3, 4, and 5 that would take us down. So potentially that's the pivot that sets up this kind of action that goes into the 2. Again, we'd have another opportunity here because we'd be looking at the fib swing from swing high to swing low. Now I'm hypothetical here, that sets up the 3. Right, so this all sets that up. So if we were to come down here and get the reaction, well, all you've got is like, hey, my roadmap looking good. So same thing every time, as I will often remind you. So if we do something like that, then the next trade is the next 50. Right? So then we have a series of lower highs and lower lows. Right? So if that plays, then we're right in sync with everything we've just mapped out here. But right now, no way to know. So there's a reasonable trade right here, trading into the C wave of the B. That's potentially tradable. If we were, again, now we don't have that pivot here, so you can't factor that in. But if we were to move off of this in 5, remember this is happening on lower degrees. So we've got 5 down. If this is going to be an A wave, you might look for 5 there. If we're going to get just a traditional zigzag, if we're going to get a 5, 3, 5, if I got 5 here and then 3 here, hell yeah, that's tradable. Very clear pivot as to where you're out. So if this comes down as a potential B wave with a target here, you have the opportunity to catch the double. So you'd be catching the long into the pivot here, and then the pivot on the way down. Right? So that's pretty much how I would approach every chart. First question always is, okay, where are we in the larger degree? What are the alternates? What can I see without any confusion or hesitation what's happening? If I can't, then I've got to put together some alternates. So I'd probably split it into 4 squares. I would split my trading view into 4 squares, so you know what I mean, like this. So, and then I would have the daily and maybe the 4-hour on one side of my primary account. On the other side, I have my alternate of the daily and the 4-hour, or maybe a 1 hour, if I'm trying to identify these swings. And I say, what looks more likely? Until one of these 65 breaks, right, there's no reason to assume anything other than 5 down gets corrected by 3, and that this was 3. This was 3, right? So we've already taken this out. So odds are that is correcting the prior 5, which brought us into this 3. Right, can I squeeze it? I can't squeeze it on the 1 hour. So let's see if I can do it in 3. So you get that idea? So this 3 is correcting this 5. Right, again, we don't know where the 5 is, but if that's 1, 2, this certainly is a contender for the 4 of this 3, right? Because we can very clearly see this. We can see this 1, 2, 3, 4, something like that. We can see that. So let's put that in green. So we can see that 5 wave. So this 3 likely correcting that 5, right? So now we're down. So we had a 3. Now we've moved off of it in 5. Next, the only logical conclusion here is to assume that we go into a 3 to correct that 5, which sets this up for potentially, now we get the 5th of this larger degree. So this is the 4, the 5 is down here somewhere. Right? Does that make sense? So I went slowly and went through that with a lot of detail, but that's the work that you have to put in to get both your primary and your alternate. And I want to encourage you guys, FX is incredibly technical if you're willing to look long term. There's so much noise on the short term. You'll get lots of action, lots of excitement. I know very few people that are successful trading FX that are trading short term. Very few. Most will tell you all their money is made off of 1 or 2 trades a year that just trend, and they have the patience or the experience to know to just stay with it, right? Stay with it until it breaks, right? Or until particularly if you're using an Elliott account, until it's invalidated, right? So if we get some change to this structure, then we come back and we go, okay, so roadmap was incorrect. So what is happening now? What's most probable based on the price action that preceded wherever we are now, wherever this is invalidated? Maybe it's up here. Maybe we get a bull run. Lots of ways this could be invalidated. But right now, path of least resistance looks down. 3, all right, so 5's taking us down, 3 correcting it. 5 taking us down. We shall see if we get 3 correcting it. All right, guys. So it's if you're still with me, shit, I didn't mean to go this long, right? It's a process, right? This is a skill set that you develop over time, and that's everything I just went through is exactly what we're teaching you at the university. So if this interests you, if you want to develop this skill set, no one thing that I'm showing you is particularly difficult. Putting it all together so you can move quickly through it and fluidly, yeah, that can take some time, but you certainly, if you come into the university, it's not a 4-year degree. You can, if you come in and apply yourself, you can get to blue belt in a month, maybe 2 at the most. It's very doable to get that level to where you at least be competent with being able to do this. Right? That's why we use the belt system, because we don't just want to dump you in there and say, here's some videos, good luck. Right? We're gonna work with you, and we're gonna test you before you pass to make sure that you've internalized. Not for no other reason. That's for your benefit, not for ours. Right? Not for us. Right? That's for you. Right? Are you clear? Are you clean? Can you do it without having can you do it off the top of your head? What's the most probable outcome here? We're going to test you on that, right? So you can do it under fire, under the pressure of trading. Right? Everything's different when you've got money on the line. All right, guys, I went way long there. I apologize for going so long. If any of you are still listening, I've got one more today. I'll be back. All right, see you later.